Talk about your money. The Dow Jones Industrial Average made gains and again finished above 50,000 this week. But what does that milestone actually mean? What does it mean for investors that are getting closer to retirement? Financial advisor Gerrod Galliano from Burns Financial is with us this morning to talk about this. Because when you see 50,000, you're like, wow, okay, what should that mean?
Yeah, exactly. So the Dow is interesting because it used to kind of be, especially in the 90s, like the go-to average.
Indicator,
and,
right.
and nowadays it's only 30 companies. So there's a lot of folks that are looking at their portfolios and they're like, wait, the Dow is at 50,000 and I'm not doing so hot. What's that mean? Well, because it's only 30 companies, most people should probably reference the S&P 500 as the broad market index. It is neat that it hit this milestone, but you can have like 11 out of the 30 do really well, and it doesn't actually translate to, really good growth. So right now we're seeing a lot of the AI stocks shifting back into some of those more traditional stocks that are on the Dow Jones. Right. The Caterpillars and the brick and mortar stuff. Right. They're doing really well, while a lot of our tech guys, not so hot.
That's so interesting because we remember years ago the dot-com bubble, right? And the big conversation now is AI that same bubble? What are you thinking with that?
Yeah, you never really know how much of a sell-off it's going to be, but in reality, you have to look back the last 2 years. When you have some of these companies that are up 200, 300%, it really shouldn't be a huge surprise to see them pull back 10, 15% here and there. And every time you get to all-time highs in any if the S&P, the NASDAQ, or the Dow, you're going to have quite a few people looking to take profits and say, okay, we just did really well. We had a 24%, 2024, 18%, 2025. Let's take some chips off the table. So active investors are doing that, and they're rotating out.
So we're talking about, on the other side of this conversation are people that hold their 401ks and have these stocks as built in for their retirement. What does it mean for them?
Well, that's a big difference between active and passive, management and investment style, where if you're along for the ride, expect it to be a bumpy ride every time you get to one of these all-time highs, because people are selling off, people are jittery about the AI future. There's a lot of good stuff there, but there's a lot of, ooh, maybe this is too expensive for what we're getting out of it. So it's getting backed off a little bit, and it's going to be volatile probably for a while, but we also are in a really good business environment. Interest rates are probably going down. Tax are business friendly, the tax environment for in the next couple of years. So there's a lot of positive too, but anytime you get to that new spot, expect quite a bit of volatility.
It's very interesting that you say that, because we also watch the jobs report, right? Which is a different conversation about money. How does that report fit into the positive things you just said, that we are in a good place for business? Yeah,
sure. It's a bit of a weird report because we lost a lot of government jobs because the administration's going in a different direction with that, but then we picked up some private sector jobs. So if you dig into the data, a lot of folks think that's a good sign because companies are starting to hire again in the private sector. It's just taking a while to ramp up because everybody's going through this transition of super streamlined to stabilizing. So there's some positive data there on both sides, positive, negative, and let's see who comes out on top.
Okay, Gerrod, thank you so much as always. Gerrod Galliano from Burns Financial, appreciate your time.
Hey, thanks.
All right, let's check in with meteorologist Zach Fradella because we got to look at the numbers for our